My conversation today is with Lucas Manuel, the co-founder and head of smart contracts at Phoenix Labs, which is the primary contributor to the Spark protocol. Is that a fair way to say that?
That's perfect. Yeah, that is. Yeah. Thanks for having me.
Amazing. And what is the Spark protocol?
The Spark protocol, that's a great question because it's sort of evolved over time. So essentially, um, the Sky ecosystem, formerly MakerDAO, um, was a very large, successful stablecoin business that managed a very large balance sheet of assets. And the balance sheet of stablecoins grew and grew and grew. And they had a very slow um, single-threaded governance system that was pretty ineffective in the end at like efficiently allocating and reallocating this, you know, multi-billion dollar reserve of USDC. So there's a lot of opportunity cost. So Sky's plan was to spin out what are called stars, but I'm going to refer to them as subDAOs in this podcast because it's more intuitive for first-time listeners. Um, subDAOs are essentially what they sound like. They're a DAO that gets created um, that has a special agreement with Sky, and they're able to borrow at wholesale rates from the Sky ecosystem. Be able to, sorry, uh, I'm just switching my microphone. It says, okay, I think I'm pretty.
Sweet. Oh, that's awesome. That sounds great.
Okay, perfect. So where was I? Yeah, no. So effectively, Spark has a very special privilege of borrowing billions of dollars from the Sky protocol and allocating them into DeFi. And Spark is the first subDAO that has the ability to do this. And the idea behind it is that there will be multiple subDAOs that will all have this privilege, and they're each going to have their own sort of strategy to deploy these large amounts of capital at scale to earn the best risk-adjusted return that they can. So currently, the Spark subDAO is managing like 4.5 billion in capital, generating 270 million in annualized revenue, and a large portion of that goes to the Sky ecosystem in the form of interest that we're borrowing on that 4.5 billion, and then the Spark ecosystem is able to keep a spread from like the gross revenue that they're generating minus the interest that they're paying. So yeah,
It,
that's
you know what? I have to react to because like I feel like I'm desensitized to the scale of the protocols at this point. Like as you know, I work at Avaro, which is the parent company of Aave Labs. The scale of the Aave protocol is
I know it's crazy.
quite something to behold. And I noticed that 16 months ago when I joined Avara and just started to build my context around the organization and what was driving their success. And we were very cautious about how we spoke to like our regulated financial partners or how we ran like BD with fintechs. And now it's like they want to hear more. They just want more and more and more. They want more detail. They're getting more excited. And it's kind of funny. Like if anybody picks this up from like a bank that doesn't have a perspective on this stuff internally, clearly most banks don't have one externally, but like $4.5 billion of money moving around and $270 million in annualized revenue while still having an aligned group of stakeholders around you that allows that to happen is the magic. Like those are big numbers.
Yeah, they're big numbers, and like one of the things that I really love to show, for example, like my friends that are less familiar with DeFi, is because it's all on chain. All of this capital allocation is happening on chain. Whether it's they're all delta neutral yield generating strategies on stablecoins, and you can see the full balance sheet in real time on a dashboard that we have, and all of the like real time revenue earnings. And there's just this like unprecedented level of transparency that you would totally not get with a traditional financial institution.
For sure. And even like I'm just so fascinated by the business model innovation around, DeFi and, self-custody experiences and what that forces everybody to do in terms of aligning incentives. And, I think about the first time that somebody sent me the Valve employee handbook. I don't know if you've seen that, but
Yeah.
the Valve employee handbook, uh, rose to some infamy when it was published like 15 years ago because Valve software at the time was making the most revenue or profit per employee by like a crazy margin. And they were only, 150 people, and they um, had this really well developed culture, and were so efficient. And it just feels like there are 100 companies like that in the DeFi space.
100%. Yeah. It's really interesting, like just the amazing amount of efficiency that smart contracts enables. Like the example that I always kind of point to like illustrate this. I used to work at a company called Maple Finance, um, and Maple, the founders came from traditional finance because sourcing capital across borders, like international liquidity provision into like a central pool of capital, and then allocating that to multiple institutional borrowers also internationally, and then getting them to pay interest and then distributing that interest. Like the amount of like manual reconciliation and settlement and like the amount of people involved, like the amount of manual labor, um, it was like extremely inefficient from a cost perspective, but also it took like 40 days to settle the interest payments. And with smart contracts, you just deploy a pool once, and the pool manager can create loans, facilitate loans, all this stuff. As soon as a borrower makes one payment, all of that interest gets redistributed to all of the LPs in like one transaction for like, maybe $1. And because of the efficiency gains of all of that, there's more yield that gets passed on to the liquidity providers. So it's like all around just like a superior product to the analogous sort of setup in traditional finance.
Totally. And you can actually calculate the improved economics. I think that's what's most interesting for the fintechs right now is they're looking at this and they're seeing an opportunity to improve the economics of a dollar. And, there's a part of me that thinks that it effectively gets doubled, just by the mechanics of how, the dollar changes format into, a unit of a US Treasury and then comes on chain and then gets deployed into DeFi. Like that's the opportunity, and that's a big scale. I The thing that I appreciate most, having sort of learned things from you on Twitter over the last, 3 or 4 years, is you make the technical piece of this, you help people understand the why. There's a guy at Aave Labs, one of the lead smart contract engineers at Aave Labs, named Emilio, that same thing. Like, if Emilio puts a thread on Twitter, it is an absolute must read. And all of a sudden, I'm like a whole layer deeper in my understanding of the mechanics of things. And I just love that because this stuff is hard to grok. It is.
It is. It's true. I've had the privilege of being obsessed with it for like 8 years now. So I've definitely done all the deep dives that come with that for sure. And yeah, Emilio is awesome.
Where was the beginning? Yeah, you guys probably know each other. Small community. Um, where is the starting point?
So yeah, so starting point was in 2017. I was working as an intern at RBC, and this was very early sort of days of Ethereum specifically. And we were doing this internship where they basically gave you like very big problems to solve. It was very like entrepreneurial. It was actually pretty cool. And one of my friends, Charles St. Louis, I don't know if you know him, he's in Toronto as well. Um, he was on the team that was basically tasked with use blockchain for something. That was their like whole thing because the bank like didn't really get it yet, and they were just like, go figure it out. So I was kind of around that while he was learning about it. And then, yeah, I just got completely obsessed, went back to university, started the first blockchain club there. And then after I graduated, I went to Ernst& and Young for 2 years to do enterprise blockchain applications. But then I went to Berlin for a hackathon um, in 2019. And that's when I started learning about it. It was like ETHLend and MakerDAO and like the very very early days. And
Eathlend, I know those guys.
yeah, and I was like,
Actually,
oh
I
my
think
god,
there was there was actually a funny. I think it was even Stani. He like screenshotted something. He's like, "We should bring back ETHLend," and it was like a
for the
funny,
OGs, yeah,
reflection. Well, I mean, I think the Aave that team had like a 5 year anniversary. Our team. I'm on the team, but there's a lot of people that have been working on this for a long time, and they had a 5 year anniversary, maybe like 2 or 3 months. Pretty exciting
that's
for
awesome.
them, and they just kind of they like tipped their hat to each other, and then they just like got back to work.
Yeah,
It was
that's awesome.
yeah.
I love that.
Um, uh, it's interesting. Like I've been really trying to do this with other folks in Canada that have some Canada perspective on the whole ecosystem. And it's like, it's just so fascinating that Ethereum, was developed here. Um, and, you mentioned RBC a couple times, like, like they're smart, look at Borealis AI. Like I look at this and I'm like, the smartest financial institutions are going to treat this with the same care as they're treating their AI strategy.
I agree with that.
Um, yeah, yeah. So, uh, not that Canada's that interesting of a topic though, outside of, and I think this is where, maybe not being in the US gives you just a touch of perspective. And Europe's a big market, but like we need to see stable coins in every major tradable currency without question.
No, I would love to talk about Canada for a second, actually, because it's like I think we are. I think we need to do more here. Straight up. Like I think the developer community. First of all, like the regulatory landscape in the U.S. has shifted so much so fast, which is super positive. Like I think that was absolutely necessary for the industry to get to the place that it needs to go. All these institutions are really like actually taking things seriously and investigating tokenization. Um, Super exciting also about like Robinhood tokenizing stocks, for example. All these kind of different things are like that have been talked about for years. They're technically possible, technically feasible, but in the regulatory landscape, no one wanted to make the first move. Um, but I completely agree with you that Canada has an opportunity to embrace DeFi, embrace stablecoins, and start to really like develop that side of things because the dollar. I was listening to such an interesting podcast with the CEO of Tether. I don't know if you've listened to that one. It was the Bankless podcast, and he was
I
basically
didn't, I haven't.
oh, you should definitely listen. I'll send it to you after this. It was basically like he talked about the growth of Tether, but the implications of um, US dollar distribution internationally to emerging markets, people in Africa, Argentina, like wherever it is that people want to use dollars to do commerce, build wealth, whatever it is. Um, that led to Tether becoming like the fifth largest holder of U.S. Treasuries in the world, including countries. So that distribution channel is really benefiting the U.S. government and the strength of the U.S. dollar. And I think governments are starting to wake up to this because the more you're able to distribute your currency internationally, the more uh, the like demand will increase, the more you can have, buyers and treasuries.
The more influence you have, you can't, you, I mean, I always try to, I started this out because I wanted to talk about Canada a little bit, and I realized that like that's a short leash, right? There's probably like 10 of these conversations, and then I want to move back into like the
Yeah,
global
totally.
context and like, but yeah, like I just there is demand for Canadian dollars. I personally think like the US dollar is the first product you consume as somebody who wants to be an American, because everybody wants to be a little American. The world went American 50 years ago,
Mhm.
right? And America exported their values everywhere. And the easiest way to think about that is I can get a US dollar. I want a US dollar. I see US dollars in music videos. Like it became this, it became what it is. And with more opportunities for distribution where it's not a winner take all market, one would think that every country on earth would want to go and meet their customers where they are. And there are people that want to consume more Canada. And the example that I love right now is, you know, in Argentina, they just discovered the largest shale reserve that they've seen in a long time, they being like the globe. Of the 15 industries, yeah, of the 15 industries that Royal Bank, like RBC Global Asset Management, like reports on when they send out like their quarterlies, there's like 15 Canadian industries. And last year they had this chart that was showing the productivity. And every industry we were lagging behind the US, and financial services was like 26% productivity lag over 30 years. But the mining and mining technology industry was 44% more productive than the Americans over the last 30 years. So you would think that Canada is going to have some role to play down in Argentina as it relates to this massive shale discovery, since we understand that technology better than anybody on earth. Demand for Canadian dollars is mostly about mining and energy. Like, why aren't we leaning in super hard? Like, and the funny thing is I think Carney's pretty darn smart, obviously. And I think he's just like, I think he knows. And the moment that he decides to click all of this in, I think he'll be aggressive about it, because why wouldn't you? You just signed a check for $150 billion to spend on defense. You're going to need to figure out some other things to go alongside it.
Yeah, that's interesting.
So, I don't know, that's just, I don't know. That's a rabbit hole. I want to come back to, so you start the blockchain club at Queens, I think, right? Still an active organization.
It actually didn't survive the bear market. I
Oh no.
graduated and then bear market it wasn't active anymore, which is horrible but hilarious
Well,
also.
if it makes you feel any better, when people ask me where I went to school, I always joke. I'm like, oh, I went to school in Waterloo, but I went to Laurier, obviously. So
Nice.
it's like I didn't go like, oh, I went to school in Waterloo, because it's a brand. Anyways, so from the blockchain club, you end up on the journey, smart contract lead now, your own shop, primary contributor to the Spark protocol. Um, what is it about this industry and the role that you play day to day in writing code and deploying code and, even the go to market? Like, what is it about this that is so unique? Um, as compared to, a role in a fintech building a card program.
Yeah, it's a great question. Um, there's a lot of different things, honestly. I think the reason that I got so interested in it early on was just how nascent the technology itself was. I don't know. I've always just been really keen on being like on the bleeding edge of tech. Like I was into AI back in university, but I like started learning about cryptocurrency and blockchains, and I started getting more into that. And like I particularly just liked this aspect of it being kind of the Wild West at the time. Like there was no people didn't really understand it. Like there wasn't a lot of, you know, regulation or like just comprehension about things. And because of that, there was a lot of opportunity. Like I kept talking to people who understood it, but had also been through, the 90s, and they're like, this is like entirely analogous to the internet back then. And like for that, I just was like, I don't know, I just got really interested in it because the people also, like I mentioned, going to Berlin for this hackathon, like the people that were at that hackathon at that time were such eccentric, pretty weird, like super intelligent, super creative people. And I was just completely drawn to that culture. It was extremely interesting to me. Mm. But the other side of it was from an engineering perspective. I think the aspect of the significance and the permanence of smart contracts really kind of resonated with me because I was actually in school for structural engineering. So I sort of had this philosophy instilled in me, like of, building a bridge, building a building, everything has to be, completely 100% safe, permanent, effectively like flawless for what it has to do functionally, with like a lot of safety factors included, all that kind of stuff. And that really drew me. Like I liked the idea of like looking at a big building or a big bridge and being like, wow, that's something that someone designed and made. And it is obviously not the same, but it's somewhat analogous to smart contracts, actually. Like when you're working on a smart contract, you you know are meticulously architecting it for a period of time, meticulously implementing, and then meticulously testing and reviewing for an extended period of time. And by the time you're finished, it's almost like a piece of hardware that, like, once you ship it, it's just going to exist on Ethereum in perpetuity, and it's just going to continue to function and facilitate massive amounts of cash flows. So that just really drew me in. I don't know, like the style of that just really was very attractive as well from a smart contracts
Absolutely.
perspective.
In a world that is constantly searching to go faster and remove guardrails, you work on things that have to be so thoughtfully designed because they're designed to be at like global scale. Um, I like the hardware analogy a lot. I mean, obviously, like the bridge or building analogy is a really cool one because obviously, I'm looking at the window right now. It's like these things are standing the test of time. There isn't concrete falling off. I mean, hopefully, there's not as many windows falling off the condos in Toronto now. Um, but it's true because our expectation is so high for what this stuff is going to power in the future. And, it's amazing to walk around every day, adjacent to this and think about the fact that you tap your card 12 times and the transaction completes in, 200 milliseconds, 99.9% of the time. And most people don't know how it works because it doesn't matter how it works as long as it works. Um, as in the lead up to this, you had described the Lindy effect. Could you do that? Because I think you did that really eloquently in the lead up to the conversation.
Yeah, absolutely. So the Lindy effect is a concept in smart contract engineering, but also DeFi as a whole. Basically, when you deploy a smart contract and the smart contract holds custody of a lot of funds, it becomes a more and more attractive target for hackers. So this is the really terrifying thing about being a smart contracts engineer. If there's any error in logic or some sort of exposed part of the system, a hacker can infiltrate it and actually drain funds. And this happens all the time in the industry. Billions of dollars have gotten hacked. It's a big problem that's continuously improving, but it exists. And so what the Lindy effect is the longer a protocol exists without being hacked, and the more funds that the protocol has in its custody, essentially it becomes more and more proven to be unhackable, right? Like if you are managing, like Aave, for example, Aave, billions and billions of dollars in TVL for many years, it's considered to be very Lindy because a hacker would have hacked it by this point if it existed. Like I'm sure that the North Korean hackers, every sort of like potential malicious hacker has thoroughly scoured that code base and tried to find a vulnerability, and they couldn't do it. So that's in a
Yeah,
nutshell what the Lindy effect is.
everything down to the protocol layer, because open networks attract more capital. I think that's another thing that you had said, and I totally agree with. I don't think I could have put it that articulately or been that articulate when I said it, but that's exactly it, like transaction processing should be a commodity. We need to drive down the cost of that so we can focus on building value on top
Mhm.
for users, for different stakeholder groups. And so that's the thing that really draws me to it. And I spent, 2 or 3 years leading an enterprise software company here in Toronto that was part of Dell, and they had a open source product called Cloud Foundry, and they distributed a version of this called Pivotal Cloud Foundry. And the pitch was, you go to the bank, any Fortune 500 in Canada, that's banks and insurance, and you say, the world is going to move to cloud native. Your workloads need to be able to go anywhere, and you need to create a layer of abstraction. And there was an enterprise go to market on this like really solid open source stack. And Kubernetes ends up winning, that entire war because of its relative openness. And now, to your point, like Kubernetes is very Lindy, I would say,
Yeah,
right?
yeah,
You
yeah,
know?
exactly.
Yeah. Cool. Is there anything that you want to talk about? Like, I'm just so conscious of like, everybody, so many people I come across in this space. It's just a fun conversation. And is there anything that like you want to talk about that you think people should know about, either like the the role that you do, or the broader vision for the industry?
Yeah, there's so many things we could talk about. I think one of the actually, okay, there's something that I would love to talk to you about to illustrate where I think the industry is going. Um, it's super exciting, super interesting integration. So, um, for those who are not familiar, um, Coinbase just deployed a new feature in their app that allows people that have Bitcoin in their wallet on Coinbase to borrow US dollars against it. And for people in DeFi, that's like a pretty basic concept. But for people that are using centralized exchanges like Coinbase, that was not possible before. And they come to the app, they have, let's say, $100,000 of Bitcoin, they can borrow $60,000 of USDC, and they can do it in seconds with no paperwork and no application process or anything like that. So if you imagine the difference already between a bank and Coinbase, Coinbase is already offering like a superior product because you don't really need to do anything. You can just access a line of credit against your assets immediately. Um, and so what's really cool about this is the user comes in and it's just this very seamless thing where they're like, we offer this product now, borrow some money against your Bitcoin. People are using it to finance mortgages on their homes, or buy some sort of asset or help them in their business or whatever it is. They're getting access to financing where they couldn't before. And what's really cool about this is there's so much happening in the background that the user's not even aware of. So the user opens the Coinbase app, they say they want to borrow. What happens in the background is the Bitcoin from Coinbase is put onto the base L2, converted to CBBTC, Coinbase's wrapper for Bitcoin. That CBBTC is put into Morpho as collateral, and then the USDC is drawn against that collateral and then added back into Coinbase. So that whole thing is facilitated through DeFi in the back end, and the user has no idea what's happening. And the other cool part about this is that this was made possible actually because of the Spark liquidity layer. So the Spark liquidity layer is Spark's capital allocation product. Essentially, like I mentioned at the beginning, like it's managing 4.5 billion in stable coins right now. And it's this automated system that's effectively moving liquidity across different protocols in DeFi according to different predetermined parameters. And so in the example of the Morpho integration, um, it's targeting a certain rate. I can see right now, 6% APY. So when the Coinbase user wants to borrow, they're going to say, okay, I'm getting a 6% rate. But what's happening in the background is Spark is adding hundreds of millions of dollars of USDC to be the other side of that transaction. Um, so and the reason that's important is because if a borrower comes in and exhausts all of the borrowable capital in that Morpho market, the rate is going to spike and it's going to be like 20% because it's algorithmically determined.
Yep.
And so that's a really bad user experience for a first time, DeFi user that doesn't know they're using DeFi. So the Spark liquidity layer rushes in with more money because we like on our side, we're like, okay, great. We could take advantage of that higher rate for a second, but also just push it back down to where it's supposed to be by adding more liquidity. So there's
programmatic incentives, right?
yeah, it's the industry, the ecosystem is getting more mature as a whole because there's more liquidity and there's more sort of assets that are able to move around. The
Yep.
markets are getting more efficient, and because of that, there's like these real world use cases that are able to kind of come up and be abstracted away from the end user. So they don't even know they're using DeFi, but in the background, all of this stuff is happening. So my point behind all of that is to say that more of these things are going to happen. More of these opportunities are going to come up for the end user, where they're able to access different financial services across the world that they've never had access to before, and they're not even going to know that they're like interacting with the blockchain necessarily.
Totally. It's interesting because that kind of brings it full circle for me. I joined the crypto industry full time in 2020, and it was through like an entrepreneur in residence stint that I did with Diagram Ventures, which is like the incubator side of Portage, massive fintech fund. And the business today is called Conduit, and this guy Kirill runs it, and it's really remittance focused. But the original idea that Diagram was working through was, how do you deliver outsized yield through fintechs? And this is like 2021, right? And so where's your first port of call for that? Genesis. What happened to Genesis 6 months after that? They blew up because all of this lending activity. It's the same reason why BlockFi blew up, right? It's like you've got, a bunch of inexperienced people hammering the phone to like do lending. I mean, that sounds like a bank to me. Like that's not a good idea, right?
Yeah.
So it was just all these like humans in the loop, which is the exact opposite of what you and I think is possible. Yeah, it's fascinating. Like I was just looking. It's funny that you went to the dashboard, because the first thing I did as soon as you mentioned CBBTC was I went to Aave.com, and I just looked at the size of the market there, because I know when Wrapped Bitcoin, when CBBTC first started to migrate over to DeFi, there was a huge market that got developed really quickly, and of course Aave was a big part of the foundation of that. That's the other thing too, and this is learning for me, is as I learn more about the work that happens in the Aave Labs team, which I'm sort of responsible for a different part of the business that's more focused on interaction with regulated financial institutions and holding some regulatory authorizations ourselves. It becomes so clear how the risk stack works too. And it's so easy to start pattern matching it to what happened in TradFi, and then you just kind of bring it over,
Yeah.
like some of the patterns are good, they exist for a reason, and
Exactly.
we
It's
just
funny.
modernize them.
It's
Yeah,
funny.
it's amazing.
It's funny to talk to, because we're having more traditional financial institution conversations as well. And like they're starting to just be like, oh, that's just like this. Oh, that's just like they're starting to make the like relation to traditional finance, which is cool. And I just wanted to mention, like, to your point, right? Like, it's too bad, like, all of the just craziness in 2021 that happened, um, like, was to do with cryptocurrency, but it was done in like a worse, almost like a worse way than traditional finance is done. Because you were saying like a lot of inexperienced people, a lot of opacity, a lot of fraud, a lot of
No
misrepresentation,
regulation.
no
Yeah, a lot of
regulation.
fraud, straight
It's
up
just
fraud.
like it
Just
was like the worst case scenario. And like,
yeah.
and then so people come to me and they're like, well, what is all this transparency that you're talking about? Like, I don't see any of that in the crypto industry. And I have to explain to them, like, these are centralized entities that are managing cryptocurrency on behalf of other people. But when I start to show them things like this dashboard, more DeFi applications, they start to see, oh, this is like entirely better than both of those things, than both traditional finance and whatever that was in 2021. So that it's starting to like actually click now for people, which is really
I think so too. And I actually think, again, 16 months ago, it was like, are we going to say on chain now? No, man, DeFi, like right through the front door now. This is the DeFi industry. That's what this is. It has meaning. Let's talk about it. Let's not try to bury it by saying on chain because it sounds, like I get on chain for like the social stuff, but like we are talking about hardcore decentralized finance right now at
Yep.
global scale. So like we should just be honest about it. Awesome, man. Well, thank you so much for doing this. I will see you next week. You had brought this up just before we jumped on the record button. Uh, Ethereum 10-year anniversary, bunch of ETH global events all over the world. You were like the fourth or fifth person this week that has asked me like, hey, are you coming to this thing
Yeah,
next week?
it's gonna be fun.
Which is, yeah, it's going to be super fun. So, you know, I'll see you next week.
All right, sounds good. Thanks for having me on. It's been awesome.
Cheers, man.
All right, see ya.